All right, what's going on?
Yo. What's up, everybody? Anybody
We're
on?
live. We're live. You can hear me, right?
Yeah.
Okay, that's good.
All right. Welcome to this week of cash flow analysis. All right. This is going to be quick. Like we do, we're going to go, we're just going to pick a random city. We're going to pick a random state and just try to do a quick analysis. Now, keep in mind, the whole point of this is to just tell you how you can eyeball a good lead, how you can just right off the bat say, you know what, this is a good deal, that's a good deal, right? So this is what the first step you're gonna do, and the whole goal is just to show you that it's easy. Hi, Sharon.
Hi, Sharon.
Yeah. So the whole goal is just to show you that this is very easy, right? Maybe it is easy. Right now you have to go through a lot of properties, you have to go through a lot of analysis to find the one that's very good for you, where whichever place you are, right? So again, that is the whole point of this. Now, before I go on Zillow, we're going to use Zillow. If you haven't, go to realestatemoneyclass.com, realestatemoneyclass.com, register for the training. You get free book, watch the training about everything you need to do to build a multi-million dollar empire in real estate. All right. You have anything else you want to say?
That's it. Let's get to it.
All right. All right. So I'm gonna share my screen, right?
Yeah, share your screen, and I will take it up from there.
All right. So I'm hopping onto Zillow. So I'm on Zillow. Can you see my screen?
Yes.
All right. So one of the hardest markets right now is Atlanta, right? So I'm just gonna put Atlanta very quick. Atlanta, Georgia. All right. So we selected some of these before, so you can see right now. All right. So just to show you, you click this, it's gonna show you multi-family apartment. That's what we want. Now, if you invest in single family house, maybe we should do that this time around. All right. If you invest in single family house, so we're just gonna click houses. Done. All right. What do we want? We want any bedroom, and we want one bathroom. Done. All right. So that's what we have, and I'm gonna sort this by the newest. Right. So I want to see what's in the market, what just came to the market. All right. So we're gonna scroll down. We're gonna scroll down. So let's look at this. So this one is for sale by the owner. All right. We're just gonna click that. Come up picture.
Looks like both of our connections are struggling.
Yeah. Sorry, guys. Sorry for the connection stuff. We're gonna fix that. All right. So this is the house. It's a very small house, right? But it is a house.
Right.
Funny color, but it
Like
is
it
what
is a house.
it is. Right. Uh, so right off the bat, well, let's keep going. I don't know if it needs work or not, but let's just keep going. Yep. So I could tell, just going through the picture, you could tell that it needs a little bit of work. That needs work. Okay, so I see frame issue. There's a lot of frame stuff that needs to be done. Okay.
All right. So this is an advantage as far as I'm concerned. Needs work. That means we probably can find a nice bargain too.
Correct. So right off the bat, we could tell the house needs work. All right. So I'm going to scroll down quickly because I just want to see how much this house is worth, approximately. Right. approximately how much
You
it
know
will.
about his estimate?
Yes, this
It was
estimate.
at the top, $94,000. There
Okay,
you
all
go.
right, all right. So this is the first lesson, right? Never buy at the retail value, right?
Mm, mm.
Never buy at the retail value. So right off the bat, Zillow says this house is worth 94,000. So here's a question: if the house is worth 94,000, from what I could see, if it's going to take me another 20 to 30,000 dollars to fix it up,
Right,
so why would I pay 105?
right.
Right. So
The whole $10,000 more than its market value or retail value based
e-
on below.
exactly. So let's say somehow Zillow might not be accurate, right? So let's say Zillow is off by 20,000. So
Right,
let's say this house is really worth 114,000. This is
right.
still still not a good price,
Yeah.
right? So let's say this house is worth 130,000. This is still not a good price.
Wait, quick question. Is
Yeah.
this a multi-family house?
No, this is a single family house.
Oh, okay.
Right. So if you remember when we opened this up, right, it says for sales by owner, right? So there you go. So in most cases, most owners thinks, most sellers, they think their house is worth more than what it is, right? So
Right.
that's not the case.
Because they're thinking of it as a home, not a house.
Exactly. They're
Mhm.
thinking of this as a home, is their house, is their baby. So they think, you know what, this house is worth 105,000. No, it's not, right? Um, Listen, I live in New Jersey. I could tell you right off the bat, this is not worth 105, right?
Right.
So right off the bat, we could tell that this is not really a good deal. However, that doesn't mean you should stop, right?
Yeah.
You have to contact the person, whoever listed this house. You have to contact and talk to them. All right.
Mhm.
So it's a single family. It was built in 1954. First here, gas, blah blah blah.
Mm.
Ah, look at that. So the estimated sales range in this area is 71,000 to 120,000. So if we pick the higher end, 120,000,
Mm.
right? If we pick 120,000, we're still not gonna pay 105,
Right.
right? And we know this is not worth does not worth 105, not with that color, right? Uh, so I'm just gonna scroll down right quick. All right. So this house was sold for 60,000 in 2019.
Like yesterday.
Like, so this is what I
So
think.
somebody probably overpaid for it.
Yep. Oh, this is what happened. Somebody paid $60,000 for this house and wanted to fix it up and wanted to renovate the house,
And they got stuck.
but they got stuck.
Yeah.
All right, they got stuck. So don't be this is what I'm trying to find, but you know, you if you're watching this video, then you know what it is. Don't be the fool, right?
Don't be the sucker of the market.
Exactly. Don't be the sucker. There you go. That's the word. Don't be the sucker. If you pay 60,000 for this house and you got stuck, I'm not paying you more than 60,000.
Mm. Well, let's do the numbers. Let's do the numbers. Maybe there's something we can't see yet.
Okay. so, so these are the math, right? So if I pay if I pay 105 for this property, right? If I pay 105 for this property, so principal interest, I put 20% down, right? Let's just say I put 20% down on a 4% interest rate. I think the interest rate is lower than that, so I'm just gonna say 2.5.
You said 2.5?
About, yeah,
2.5?
percent interest rate. Yeah, right now it's low.
Wow.
So you see that if I put 20% down, right, that's 21,000 on a 30-year mortgage.
Hmm. I can't see your screen, just so you know.
You can't see my screen. Why not?
The numbers, I can see the house.
You can't see the numbers.
I can see the date, event, price. I can see the house. I
Okay.
can see the house and the price history and public tax history. That's what I can see.
What can you see now?
Same thing.
Did it freeze?
Maybe. Okay, now it's changing. Look like something is changing. All right. We definitely got to get our shit together in terms of connection.
So uh, can you see now? Can you see the tax history, tax assessment?
No, I can see the map. I can see the map.
Map of the house?
Yeah, the map and the house. The
Okay.
the home, the property homepage on Zillow is what I can see.
Okay, all right. So I'm just going to tell you what I'm looking at quickly, so I don't want us to waste time on this part. So,
Yeah.
so if I put 20% down on a
Hmm.
2.5 interest rate, right,
Right.
and property tax is, so that's going to bring the monthly payment to $332 per month.
Hmm.
The property tax is $94 per month. Home insurance is $37 per month, right? So the utilities, because the tenant, listen, your tenant has to pay the utilities, right? Again, don't be the sucker. The tenant has to pay the utility. So utility, let's say another $100 per month.
Wait, that doesn't make the tenant sucker though.
I say do not the owner. If you are watching this, you are the investor. Don't be the sucker. Your
Okay.
tenant, your tenant has to pay the utilities.
Right. Right.
That's what I'm
True.
saying. Yeah.
Yep.
So electricity, water, gas, you make sure your tenant pays that.
Hmm.
Right now, so that's what I meant. So that brings the estimated monthly cost to about $562,
Okay.
right? $562. So on Zillow, we're going to click rental value. So Zillow says this house rents for 1,372 per month. So if this house is in a good shape, right, if this house is in a good shape, then this will be a great deal, even at 105, because you get to rent this house out for 1,372, and your expenses, your bill uh is 500, 600, give or take, right? Your expenses, are you there?
Yes, I am.
Okay, so your expenses is
What's
600.
what's the potential rental income again?
Okay, did you leave somewhere? Okay,
Huh?
okay.
One
The
thousand. One
no, no, no,
thousand.
no, 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 let me say, the rent's estimate, the rental value you get every month is
Right.
1,372 per month.
372. Okay.
Your
Okay.
your expenses, give or take, is $600, give or take.
Right. You said 562 earlier, right?
Yeah. So now you're really looking at a cash flow of almost $700 every month. Again,
Right.
that's assuming this house is in a good shape.
Right.
If this house is in a good shape, hell yeah, that's a good deal all day. So put 20,000 down, make $700 every month. That's 700 times 12. That's what is that? 28 28 uh 28,000 or something. What's 700 times 12?
700
What
times 12.
yeah,
All right. Let's see here. 700 multiplied by 12. That's $8,400.
that's 8,400. So if you put down a down payment of 20,000,
Mm-hmm.
right, and you cash flowing 8,400 every year,
Right.
right? So that gives you about, if I'm right, almost 42%
Cash and cash.
ROI.
That's cash and cash.
Yeah,
That's
cash on
42%
cash.
cash and cash.
Yes, that's 42% cash on cash. Of course, that's a great deal. I know you got to go, right? All right. So, of course,
That's okay.
that's a
That's okay.
great deal.
I got a few minutes.
Okay. So, that's a great deal, right? I would do that every day. However, this house is not in a good shape,
It needs
right?
work.
it needs work, and I'm saying frame. It needs framework. It needs structure work. So
Mhm.
that's a big deal, right? So that is probably going to take another 30 to 40, maybe $50,000 to do. So here's the verdict, right? I will not take on this deal, right? I will not take on this deal.
You won't waste your time on it.
I will not waste my time on it. The only way I'm gonna buy this deal, if I get it for 60,000,
Uh-huh.
right? Or if I get it for 65,000, right?
Right.
Then I would take the deal, because then I put in work to get to that 105. But if I get it
Right.
for 105, that means I have to put in work to get it to 160. That makes no sense,
Right.
right?
Right.
So for me to buy this deal, I have to pay 60. So personally, I will not touch it. But if you want to touch it, just reach out to the owner and give them an offer of 60,000 or 60,000
$30,000.
or 30.
30. You pay
Go
60
low.
for
Yeah, you pay
it.
60 for it. So
That's if it's worth your time.
exactly. At least
And,
if
and,
you
and
do
and
that,
it's not just that they paid 60 for it, it's that they paid 60 for it just in 2019. That's like yesterday.
exactly.
So there must be a reason.
Yeah, they just bought it and they got stuck.
Yeah.
All right. So, all right, that's all this again. Keep in mind, guys, the whole point of this is just to can you see me? No?
Yeah, I can see you.
All right. The whole point of this, could you include all that in the rent? Uh
We, what does that mean? I guess everything is included in the rent. The rent must be part of our analysis. So I'm not sure. Or maybe you're talking about utility.
oh yeah, of course. You for utility, yeah. You could charge them more and you pay the utility, but that's like giving yourself more work to do, right?
Yeah,
So
exactly, exactly.
yeah,
Especially for
better
a
yeah,
single family, you wanna make sure you push a lot of the responsibility, like taking care of the property for rental unit, sorry, utilities and stuff like that. You want to make sure you push that on the tenant because it's more or less a feel that they own a home. So
correct,
take advantage of that.
correct. And this is a single family house, right? So this is a single family house. They have to take care of it, and you
Yeah.
have to put that in the lease. Like, hey, I mean, obviously, if it's something like HVAC system, then you are responsible for that. If it's something like plumbing, then you are responsible for that. But in terms of taking care of your house,
Hmm.
they should be responsible for that. All right.
Yeah.
So that's what we got for you guys today. If you haven't, go to realestatemoneyclass.com.
Yes.
Right. Register for the training, attend the training, get your pen, get your paper, learn as much as you can. All right, this is fun. Like I always say, it's very simple. It's a simple concept. You buy low, you sell high. Either you sell to yourself by renting it,
Right.
right, or you
Or you
sell to
sell to other
somebody
people
else.
for quick cash.
Exactly. You buy low, you sell high, right? But it's not necessarily easy because there's a lot of moving part to it, right?
Yeah.
If you make mistake in one part, can cost you a lot,
Yep.
right? But the concept is very simple and you can do it. All right. So go to realestatemoneyclass.com.
Awesome. Awesome. Also, we have a free book for you there. So, also at the end of the class, you'll be able to book. You had the opportunity to book a session with a strategist. So, if that's what you want to take on. All
Yeah.
right. That's it for today. This is our third episode down. Subscribe, share, like, follow the page so you can get notified every time we come live like this. This is the third episode of many to come, and I'll see you at the top.
Yep.
And peace.
Alrighty.